Hey traders, kindly listen to this before I say a word.
This is without a doubt the easiest way to identify accumulation, manipulation, and distribution. But firstly, what is AMD? Basically, price will accumulate. That is essentially just consolidation, where price is moving sideways. Price will then manipulate by taking out liquidity, and then price will distribute inside the range that the manipulation has created. And this is where I want you to start looking. Asian session, London session, New York session. So when you get to the charts, I want you to highlight the Asian session. If the Asian session has accumulated, you should expect London session to manipulate, and in which case you would expect New York session to distribute. But here's the thing, if you arrive to the charts and the Asian session has expanded instead of accumulated, you should not expect London session to manipulate. You should expect London session to accumulate, therefore expecting New York session to manipulate. So it all comes down to what the Asian session has done. Asian session, accumulation. We then expect London session to manipulate, therefore expecting the New York session to distribute into this value gap right here. All you have to do is come to the charts and see what the Asian session has done first. And that will offer you the most precise way to identify AMD. And in terms of time frames, I typically will look for this type of pattern on a 15-minute chart, but I am in confluence with the higher time frames.
Now, for the sake of beginners, let's break it down in a manner you can all understand. So he is paying attention on accumulation, manipulation, and distribution, and I am glad because it's clarified that we can look at this all on 3 major trading sessions, which is Asian session, London session, and New York session. Let me start by telling you that not all pairs you trade on these sessions. In short, I am trying to say, each session has a pair that you should trade because it tends to be very active during this sessions, and as well, some pairs are very dormant in this session. I will break this down later on this video by showing you active pairs on each and every trading session. So, watch till the end. Don't forget to subscribe, like and share. Now, let's understand this 3 giants in the market, which is also called the power of 3 in depth for the sake of those who have never heard it before as we look for examples. ICT power of 3 is the strategy which exposes the smart money traps for retail traders. As we all know, as a retail traders, we are trading against the smart and informed money, and they tend to manipulate the market moves to trap the retail traders. In this video, we will be exploring the ICT power of 3 strategy to avoid these traps and follow the footprints of smart money. But to be able to use the ICT power of 3 strategy, one must have a correct daily bias. Daily bias means the anticipated direction of the day that can be found by various means of technical analysis. Once you have got the correct daily bias, you can use ICT power of 3 strategy to catch a good move in the market. Now let's start with defining the ICT power of 3 strategy. What is ICT power of 3 strategy? The word ICT power of 3 is basically derived from 3 main concepts. 1. Accumulation. 2. Manipulation. 3. Distribution. ICT power of 3 concept is also known as AMD setup because of the 3 main concepts: accumulation, manipulation, and distribution. Now let's understand what does it mean by accumulation, manipulation, and distribution. Accumulation phase is when the day opens, market ranges near opening price, and smart money accumulate their positions in this area. Manipulation phase, as obvious from the name, is to manipulate the retail traders. After accumulation, smart money moves the market in opposite direction, like on bearish day they manipulate the retailers toward buy side. And on bullish day they manipulate toward sell side. They do this by running price above or below the accumulation phase. Distribution phase is the real move of the day. After manipulating retail traders, smart money add their positions toward the real direction of market, hence moving market opposite to retail mindset. ICT power of 3 in bullish market. On a bullish day, prices accumulate near the opening price of the day. As we discussed earlier, smart money accumulates their buy positions in this area, and after that they manipulate retail traders by a sharp sell move below open price, engineering the liquidity and targeting any old low. Retail traders mark this manipulation move as breakout toward downside and they try to sell the asset. On the other hand, those retail traders who bought in the accumulation get their sell stops activated below the old lows, so neutralizing their buy positions. Now smart and informed money buy the asset in discount area below its opening price and push the price upside in distributing move targeting old highs as a liquidity, leaving a wick below opening price. After clearing the old highs liquidity and forming the high of the day, smart money sell their positions to close their buys and market moves back to the daily range, leaving a wick above. It closes below the high of the day. ICT power of 3 in bearish market. On a bearish day, prices accumulate near the opening price of the day. As we discussed earlier, smart money accumulates their sell positions in this area, and after that they manipulate retail traders by a sharp bullish move above open price, engineering the liquidity and targeting any old highs. Retail traders mark this manipulation move as breakout toward upside and they try to buy the asset. On the other hand, those retail traders who sold in the accumulation get their buy stops activated above the old highs, so neutralizing their sell positions. Now smart and informed money sell the asset in premium area above its opening price and push the price downside in distributing move targeting old lows as a liquidity, leaving a wick above opening price. After clearing the old lows liquidity and forming the low of the day, smart money buy their positions to close their sells and market moves back to the daily range, leaving a wick below. It closes above the low of the day. In which market ICT power of 3 works? ICT power of 3 or AMD setup works in every market which follows time. The markets which have an opening and closing time, and that why he emphasized on trading sessions. To clarify on this, if you see Asian session accumulating, expect London session to manipulate and New York session to distribute. Again, if you see Asian session distributing, expect London session to accumulate and New York session to manipulate, and vice versa. I told you again at the beginning of this video that you should know the right pair to trade during this session. So, take note of this. New York session, the best pair to trade during the New York session is any currency pair with the USD, CAD, or XAU. The same goes for Euro, GBP, and CHF. These are the best currencies to trade during the London session. During Asian session, the best pair to trade is pairs that contains JPY, AUD, and NZD. This brings us to the end of this video. Don't forget to subscribe, like and share. Bye guys, I will see you in my next video.